Hey everyone, welcome back to Corporate Decoder. Today CEIN just filed an 8K detailing a new loan agreement, and I am seeing a few things that suggest the company is still actively seeking funding, which could mean more dilution ahead. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing shows the company's subsidiary secured a $500,000 loan, but the terms might tell a bigger story about their cash needs. So what is going on here with Camber Energy Incorporated? Essentially a subsidiary of Camber Energy called Viking Ozone Technology LLC, which is itself a part of Viking Energy Group Incorporated, has gotten a new loan. This happened on the 17th of April 2026. The main point of this filing is a loan agreement. A subsidiary took out a promissory note for $500,000 from what they call an accredited investor. This means it is a private deal, not something you or I could typically invest in directly. The loan is for the subsidiary, Viking Ozone Technology LLC, and not directly for Camber Energy Incorporated itself. Sometimes companies use these kinds of arrangements to get money into a specific part of their business without it directly hitting the parent company's balance sheet immediately. Now let's look at the terms of this $500,000 loan. It comes with a fixed interest rate of 10%. That is pretty standard, maybe a touch high depending on the collateral. The key here is the maturity date. It is set for the 15th of April 2027, which is about a year from when the loan was made. But there is a really interesting twist. The loan could be paid back sooner than that if the company sells a specific piece of equipment they call it their VK-300 waste treatment unit and gets the money from that sale. This tells us that the company is pinning its hopes on selling this particular unit to get out from under this debt. This loan might just be one piece of a larger funding puzzle. The filing mentions that this $500,000 note could be part of a series totaling up to $750,000. This suggests they might be looking to raise more money from other investors under similar terms. The agreement also includes standard clauses about what happens if things go wrong, like not paying back the loan or if the company faces bankruptcy. If any of these issues pop up, the loan could become due immediately and the interest rate could jump up by another 10% per year. That is a pretty big jump, which is a sign of increased risk. To make sure the investor gets their money back, the subsidiary is giving them a primary claim on the money they get from selling that VK-300 waste treatment unit. This means if they sell the unit, the loan gets paid back first from those sale proceeds. The term pari passu means that other lenders of the same type would be treated equally. So, if they end up taking out more loans in this series, they would all have the same priority on those sale proceeds. This is a common way to secure loans when the primary asset available is the proceeds from a specific sale. It is important to note that Camber Energy Incorporated itself is not directly responsible for this loan. They haven't signed onto it. Also, this loan doesn't give the investor the right to convert the loan into company stock or any warrants to buy stock in the future. This is a pure debt deal. No equity dilution from this particular loan, which is something investors often worry about. However, the fact that the company is taking on more debt indicates they need cash to operate or fund specific projects. This comes after news in April 2026 that Camber Energy's downed. Line detector passed a US government test and they were advancing broken conductor protection technology. These are interesting developments, but clearly not enough to generate the cash needed right now. The full details of this loan agreement are available as an exhibit to this filing. Essentially, this is a company that is still in a phase where it needs to borrow money to keep things moving. While $500,000 might not sound like a lot for larger corporations, for a company with a market cap around $10 million like Camber Energy, it can be a significant amount relative to its size. The report is signed by James Orris, the Chief Executive Officer. This is a routine part of these filings, confirming the company is aware of and signing off on the reported information. The filing date is the 23rd of April 2026, a few days after the loan agreement itself was made. So what is the big picture here? Camber Energy Incorporated subsidiary has secured a loan that is dependent on the sale of a specific asset. This signals that the company is likely facing cash flow challenges and is relying on asset sales to meet its financial obligations. While this loan itself does not directly dilute existing shareholders, it highlights the ongoing need for capital. Companies in this position often have to look for additional financing, which can lead to future share offerings or more debt. The risk I am watching is the company's ability to actually sell that VK-300 waste treatment unit in a timely manner. If they can't sell it, they'll have to find $500,000 plus interest from other sources, potentially leading to more expensive financing or dilutive stock sales. The fact that this is part of a potentially larger $750,000 series of notes also suggests they might be trying to raise more capital soon. What I am actually looking for is clear signs of consistent revenue generation from their underlying technology, like the downed line detector or the waste treatment unit rather than relying on debt and asset sales to stay afloat. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this video helpful, please like it, subscribe for more, and join our Discord community linked in the description.